Welcome and good evening to Free Law School and the Prosapreneur Network, talking about all things business structure. Welcome, entrepreneurs, founders, side hustlers. This is your conversation. This is your conversation. Everything business structure. If you're getting ready to launch a business or if you're actually operating a business, this is a conversation for you. We're going to be talking about all the things and answering some of the questions that you would want to ask a professional prior to launching your business. And if you're already launching, there are things that you may not be aware of, like does your LLC or corporation afford you the level of limited liability protection that you signed up for? Or are you exposed? That's the conversation. Let's see if we can get some others here into the conversation. Does your LLC or corporation afford you the level of limited liability protection that you signed up for? And are you aware that you were actually signing up for limited liability protection when you form the entity? Many business owners think that the reason behind forming the LLC or the corporation is simply to go into business. That's a widely held belief that that's what we're doing there. We are actually going into business when we form the LLC or the corporation. We're going to get into it. We're going to talk about it. Let's see if we can get some other business owners, entrepreneurs into the conversation. Something to think about while you're waiting, Felipe. And thank you for joining. Hello to you. Something to think about. If you're operating a business right now, is your name on your LLC? Is your name on your LLC? That's the question. Because in order to get the limited liability protection, we must separate ourselves in our personal life from our professional responsibility in the business in order to keep your personal assets safe. And it doesn't matter where you're operating from, it doesn't matter what state you're operating from or what state your business was formed in. It doesn't even matter what country you're operating from because it's really a global concept. Each country has its own version of the limited company. And the purpose behind the limited company is to protect the business owner's personal assets from any business liabilities. That's a global thing. And the limited company is the workhorse because it's easy to maintain. Even though in the US, we have the corporation, there is the sole proprietorship. When we're talking about the type of business forms, we have the sole proprietorship, we have the partnership, and then there is the LLC, and of course, the corporation. Now, the difference between all of those is that with the sole proprietorship, there is no protection. The business owner operates with no protection. And here's what that means it means that if the business engages in activity and that activity causes harm or injury to someone or some entity, then that business owner is going to be personally responsible for making them whole. That means that the owner's personal assets, the home, vehicles, bank accounts, and anything else of value owned by that business person is going to be exposed and capable of being seized and sold in order to satisfy that judgment. That's why it is not never advisable to operate as a sole proprietor. There's no protection. There's no shield. Now, partnership, there is the general partnership in which both partners or all partners are going to be personally responsible. There is no shield, there is no limited liability protection in the general partnership. But then there's also the limited partnership. And the limited partners, the general partner operates the business. So the general partner takes on any liabilities that occur. The limited partner puts up the investment and does not control or operate the business. Therefore, that limited partner has some limited liability protection because he only invests in the business. Kind of like the corporation. Shareholders have no personal liability stake in the business. They only own their equitable share of the corporation. Now, when we're talking about the limited liability company, the LLC is a hybrid between the corporation and the sole proprietorship. It allows for the operation of the business by the business owner in their personal capacity, but it also provides limited liability. The personal part of it is that any profits or losses realized by the business passes through to the business owner. But the business owner is still entitled to limited liability protection. That's the hybrid. You get the pass-through treatment from a tax standpoint, but you're also afforded limited liability protection. And the reason for that is because the corporation, the reason why many business owners opt for the LLC, it's easy to maintain and it avoids the double taxation that occurs with the corporation. In the corporation, you are going to be taxed twice. The corporation is going to be taxed on its profits, and then when the dividends, the payments to the shareholders, when those dividend payments are made to the shareholders, the shareholders have to report that income on their individual tax returns. And that is where the second taxation takes place. So, in order to avoid the double taxation, many business owners opt for the LLC. Welcome, welcome. Felipe, are you operating a business now? And let us know where you're joining from. Feel free to put a question or two or comment there. Most businesses are built backwards. Most businesses are built backwards. That's a fact. And it's primarily due to the misconception about formation of a business as well as business structure. And this is how that occurs. Business owners are advised, first and foremost, form the LLC or the corporation, get an EIN number, establish a business bank account, and start doing business. Excuse me, very few business owners give any thought, very few business owners give any thought as to whether or not assets and risk should be separated. If everything exists in the same place in the operating company, then exposure is certain. We don't have to guess about it. We don't have to do a forensic analysis. It's certain. If the only entity, if the business is operating out of a single entity, then exposure is sure. If we check with the Secretary of State's office, if the name is there on the business owner signed up as the responsible party for the EIN number, business owner named personally on the business checking account. Even though the business owner believes that they formed a separate entity, everything points back to you. Everything. There is no separation. And separation does not happen automatically. It must be designed. And if all you formed and operate out of is that LLC or corporation, your operating entity, then you have no protection. Felipe, we're going to sign off. We appreciate you joining. We're going to sign off. Thank you so much for joining. I hope that we've provided some useful or helpful information. We'll see you on the next live.